Hello everyone, PS from PS Invest Plays here today. I have 10 stocks that are at the cusp of appreciating to a point where you can gain 30 to 50% returns by the end of 2021. There is an ETF that if you had invested $500 every month for the last 6 years, it would have given you 600% profits. What does the stimulus mean for the stock market? I have a stock market prediction for the end of 2021. The topics that we are discussing today, when I started editing them in one video, it was becoming a very long session. I have divided this into several parts. We'll name all the videos as individual parts so that it's easier for you to keep track. Also, I'll create a playlist and add clear descriptions on which part to watch for what component. So stick around. I think you'll like what I have in store for you today. All right, let's get started. It's going to be a jam-packed session, so I'll try to keep it as fast as possible. Banking stocks that I think are undervalued, and the reasons why I think they should give 30 to 50% returns going into 2021 and by the end of 2021. Fed recently announced that they are going to allow share buybacks. That's big news for banks. And they would allow this only for banks. What buybacks mean? That banks can use their profits or cash on their books in order to purchase the stocks from the market, from the open market, and that results in reduced equity count in the market that in return increases the share price or the equity price by at least 3 to 4%. So where does the remainder of the game go? Now, banks have not been hit by this pandemic. In fact, banks have done really well and they have shown that they are resilient to this pandemic because of all the restrictions by the different administrations. Also, they have extremely strong balance sheets. And with the economic reopening and ease of travel restrictions, these banks should gain. With the stimulus coming in, there is going to be ample liquidity. So the venues for banks open up dramatically. Right now, the businesses who wanted to do M&As or needed funds had put those on hold because of the uncertainty in the market. Now, with the vaccine rollout and businesses reopening, companies would be more willing to spend more, expand their business more. These banks also give good dividend of at least 3 to 4%. These banking stocks have recovered, or rather partially recovered, in 2020, but they are still undervalued. They haven't reached their top peaks. Some out of these, for example, JP Morgan or Goldman Sachs, have reached or even crossed their prior peaks, which was in February, but they are still undervalued because the real growth is not accounted for in their stock price. Now, I don't know if you heard, Goldman Sachs is also entering into the mass market. They are a very niche bank where they only cater to institutions or people who have millions in their portfolios. Now, Goldman Sachs is prioritizing masses. They have a brand called Marcus, is focused towards rolling out high yield savings accounts. They are also introducing features such as investments through their app, very similar to what Robinhood. So I think you should expect 20 to 30% on a minimum jump in their prices. My advice is buy on the dip and keep dollar cost averaging. 20 to 30% is a very low estimate according to me, but I definitely think that these stocks can give you 30 to 40% returns. Now, let's dive into some more details around each and every banking stock here. Let's take a look at Citigroup. Now, if you look at the earnings per share, they have not lost money in the last 3 quarters. In fact, they have, whatever the analysts had forecasted, they have easily beaten those estimates, which is a very good sign. They give good dividend, so you have that many of income. The valuation at which it currently stands in terms of the price to earnings ratio, this stock is highly undervalued. Its financial strength is extremely good. If you look here, the industry average for price to earnings ratio is 16, and this is trading at not even 12. Advice on Citigroup is buy on the dip. It has been making money, which is not accounted for in the stock price. I see this stock going to at least $90 at the end of 2021. Now, JP Morgan Chase. Now, this is the biggest bank in the United States. I think it is one of the biggest banks in the whole world. At the peak in February, the stock was trading at 135. It has still not recovered, and as we can see, it has been giving consistent profits for the last 2 quarters. It missed 1 quarter, and that was due to accounting controls where they were setting aside a stash of money just in case if there is a calamity arising from the pandemic. So now they have surplus amount of money that they had set aside for the pandemic that they never used, which now they will be able to utilize to get into credit cards, into travel, into M&As. Now, JP Morgan had recently announced that they are going to purchase a travel credit card company. What does that indicate? That JP Morgan is bullish on travel. Their EPS or earnings per share is as per the industry average, where I think this is on the lower end. Now, JP Morgan is the top dog in the banking industry. I think the PE for JP Morgan should be at least 21 to 22. With that said, this stock I think should end up at 190 or 195 by the end of 2021. They have been giving consistent dividends, and they are quarterly, and they are still undervalued as per the valuation and as per the balance sheet. The financial strength is extremely good, and the sentiment for the short term as well as for the long term is extremely strong. All right, let's look at Goldman Sachs. This stock was trading around 239 or roughly around that during the peak in February. It has recovered more. It has recovered and gone beyond that price, but I think there is still room to go. Again, if you look at the earnings, both Q1 and Q2, they missed their earnings, but you cannot gauge these earnings just by looking at, oh, they missed it. No, they did not. They set aside similar to JP Morgan Chase, they set aside a good amount of money in billions of dollars so that they can handle the calamity, the pandemic. If there is something really bad that happens, they want to protect themselves. So they have this money that is sitting in their account, sitting on their books that they want to utilize going into 2021 with the recovery that's coming. Their price to earnings is, wow, there is a huge gap with the industry average and Goldman Sachs price to earnings. I can easily see this stock going to 400 or at the minimum 380 to 390 by the end of 2021. They give extremely good dividend. They haven't cut their dividend. And their long-term sentiment is extremely strong. They are extremely undervalued. The financial strength is extremely good. The growth stability is extremely good. This stock gets a big thumbs up from me. Bank of America. Bank of America was trading at almost 34, 35 at its peak. It's trading at 30. It has still not recovered. Similar to every bank, they had set aside some funds, and that resulted in Q1 loss. But not a loss, but they missed on their analyst estimates. But I don't consider that as a loss. And they have beaten the last 2 quarters. They are trading, the price to earnings ratio is 14.86, which is lower than the industry average. But I think Bank of America has done extremely well in these uncertain markets. At the end of 2021, I think this stock should be trading at least 40. They have given consistent dividends, which is very good. They are still undervalued, and the financial strength is extremely good. You can expect at least a 30 to 40% return on your funds if you invest in Bank of America stock. Now, Morgan Stanley has recovered from its peak in February. Look at the PE. I mean, seriously, they are trading at 11.42, where the industry average is 20.75. They're crushing their earnings. Again, in Q1, they missed out, but that was because they set aside some funds for the pandemic. So it's not their fault. They have the money. They did not lose it. They have been paying quarterly dividends. They're doing extremely well. They are undervalued right now, and the growth stability is extremely good. Considering their price to earnings and how low they are valued, I think this is a good play where you can get at least 60 to 70% returns on your funds. Am I investing in these banking stocks? Yes, 100% in all of these 5 banking stocks. I'm going to dollar cost average. All right, friends. So these were my top 5 banking stocks.
This concludes part 1 of our series.
Well, that's it for today. Thank you for watching. If you like this video, like, subscribe, and share this video with your friends and family. This helps me grow the channel and bring out this content out to you. Thank you for watching. See ya. Bye-bye.